Welcome back to Roxham TV. I'm your host, Jamie. We've got another big show today. So, power is shifting across energy, tech, finance, and even how information moves. So, today's show is about who controls resources, who controls data, and of course, who controls money, because those three things are shaping the world right now. And we are going to break down what's happening in Europe because Russia is planning to cut off a key oil flow into Germany, and this is not just a supply issue. This is very much leverage. We are talking about a system where one decision can impact millions of people, can impact fuel prices, of course, and also an entire economy. And when you combine that with tensions around the Strait of Hormuz, you start to see something bigger, that global energy is no longer stable. Then we move into tech, and this one gets really uncomfortable if you ask me. We are going to talk about what Meta is doing internally because they are rolling out software that tracks mouse movements, keystrokes, clicks, and even screenshots. They are calling it AI training. Now, we're going to break it down properly because this is not just a tech story. This is also about work, about privacy, and where that line is between productivity and surveillance. Next, the platform war is also heating up. We will also cover what X just launched on Twitter, something called custom timelines. It sounds small, but it really isn't, because when you combine that with the recent financial features, you start to see the clear picture, the direction that X is opting for. We are turning that social media and maybe eventually get turned into financial platform all in one place, and it's starting with X. Then we head into policy, and this one matters for crypto. We are going to break down that Kevin Warsh, that what he just said during the Senate hearing, because this could be a preview of how the next Fed might think about Bitcoin. And for the first time in a long while, we are hearing something different. So not rejection, but recognition. And of course, we have to talk about Bitcoin because Bitcoin is holding rather strong right now. It's sitting just below 80K. So momentum is building, like everyone is claiming here on X. Institutions are buying. So the key question we're asking here is simple. Are we going to break out? We will go through the data, the flows, and what's actually driving this move. And finally, we have to talk about the global crypto shift. We will be covering what's happening in Russia because they just passed a major crypto bill, and the strategy is very clear. Is that they control crypto at home. I mean, at home, that means in Russia internally, but they use crypto globally, which tells you something important. Crypto is no longer just a retail story, it's becoming a geopolitical tool. So this episode is very important because even if you're not trading, even if you're not deep in crypto, all of this affects prices, of course, it affects markets, jobs, and the system we rely on a daily basis. Because here's the real theme today. Energy is being weaponized, data is being captured, and money is being redefined. And all of it is happening at the same time. So what we're going to do today, of course, we'll break down all the news step by step, simple, clear, no noise, so you understand what is really happening and why does this matter. So, all right, a lot to cover. Let's get straight with the first news of today. So, I do want to start with energy. And this is not just about oil. It's not just a oil price going up because we all know that. This is a power story, and Europe is being grabbed by the balls. So, what just happened is that Russia is planning to halt the transit of Kazakhstan oil to Germany starting as soon as on 1st of May. So, this is not just speculation. The updated supply schedule has already been sent out. So, Kazakhstan knows it, and of course, Germany knows it. The impact is almost immediate. So this matters because there's actually a key facility in Germany that most German people have never even heard of, but it actually supplies fuel to around 90% of vehicles in Berlin and Brandenburg. That facility is about to lose 17% of its oil supply. So this is not a small disruption by all means. This is some serious hit to the entire system. So what happened next is like, okay, officially saying, Poland says that, okay, we will help reroute the supply. So on paper, there is a backup plan. But here's the problem. Like we don't know the cost, we don't know the timeline. And in energy markets, those two things matter the most. And speaking of energy, you cannot just flip a switch and replace the supply. Oil flows through the pipeline we're seeing here. There, it takes like logistics networks, refineries, so everything is well connected. So when one piece gets cut, the entire system would feel it. Because like this is not just happening in isolation. At the same time, what we're talking about is like the Strait of Hormuz is under control, the Middle East conflict is still ongoing, shipping routes are unstable, so oil supply is under insane pressure. Now, just to add to this, Russia cutting supply to Germany, and all of a sudden, what you get is we get the regional disruption, we get also global uncertainty, and that's when energy markets get volatile. If we zoom out and we look at the bigger matter, this is when I get a little bit more uncomfortable. Like for years, Europe built a system around one consumption only, which is like there will always be cheap energy available from somewhere else. But today's problem is that that assumption is simply breaking because right now what we have is Russia can just simply turn off the supply whenever they want. Middle East routes are very unstable. Global energy flows are politicized. So energy is no longer just a commodity, it's actually a leverage. And this is not just about oil. This is about control, about dependency on certain few countries, especially Europe is in deep water, if you ask me, and also sovereignty. Because like if your country depends on external energy, then your stability depends on external decisions. And that's exactly what we're seeing in Europe. And that's why I have been quite bearish on a region of the entire continent of Europe. Germany is one of the most industrialized economies in the world, but it is also highly dependent on energy imports. So when supply gets disrupted, the impact is amplified. And this is not abstract because this, what eventually affects is that fuel prices will go up, transportation price would go up, supply chains get disrupted, and also, of course, that would affect daily life too. If 17% of supply disappears, of course, there will be consequences. Europe didn't just end up here by accident. This was a policy choice. For years, what Europe has been doing is that they prioritize cheap energy. I mean, there's nothing wrong with doing so, but like long-term independence, like what they lack is long-term independence. And right now, they are in deep water. And the reality is quite simple. Like if you cannot secure your own energy, you're not really in control because in today's world, energy is equivalent to power, and whoever controls energy controls outcome. So what I'm watching next for this news going forward is that can Europe replace that supply quickly and at what cost and how sustainable is that solution? Because temporary fixes, of course, they are not long-term strategies. And this Russia's cutoff is a constant reminder for Europe. Could be a wake-up call. I hope so. All right, so let's shift gears a little bit and do want to talk about Meta because Meta is reportedly rolling out new software on employees' computers in the US. And this software does something very specific, which is to track behavior of their employees. So what is happening here, according to internal communication, this system will, what it does is that it captures mouse movements, it captures clicks by employees, and also the keystrokes, and in some cases, maybe even screenshots. Now, here's the key part. Employees don't need to do anything special. They are told that they can help train AI simply by doing the normal daily work. So every action, every interaction you have on your laptop, on your computer, becomes data for your AI to replace you in the future. So what Meta is saying, Meta said this is about improving AI systems. They say safeguards are in place to protect sensitive information. And the idea is simple, is to use real human workflows to train better AI models so that they can replace the employee with cheaper costs in the future. I mean, I added that part, but you guys get the gist. From a technical perspective, that of course makes a lot of sense. AI systems improve when they learn from real world behavior. But let's be honest about what this actually is. Meta is squeezing all the profits they could think of from the same employees. And this is also AI training, but at the same time, this is workplace surveillance. There's no need to dress it up with nicer language, in my opinion. Because when you're tracking, like everything someone types, everything they click, and how they move through their work, that is a very high level of visibility into how someone operates. So employees, that's where I have the problem because employees were not asked like, can you install this AI software voluntarily? They were not asked, they were informed. And that is an important difference if you ask me, because this is not an opt-in participation. This is something being deployed as part of the system. So if we zoom out, Meta built one of the largest businesses in the world by collecting user data. Everything tracking behavior, understanding patterns, optimizing systems based on that data. And that is the core model of Facebook, Meta. What's changing here is where that data is coming from. Before, Meta was collecting the data from users. Right now, they're doing that with their employees, so with their own people. So the same logic is being applied internally. Human behavior becomes trained data. And it does remind me of another, this happened to be a trend because like there are news, this is the news that I saw last week. So what happened here is the Indian workers, they were told to wear this head mounted cameras to record hand movements and train AI systems. So here's the footage of them wearing that headset in a factory. So if you ask me, I'm a little bit heartbreaking to see this because like the AI that we see today, like the humanoid robots, what they suffer the most, what they have find difficulties is that they try to copy humans' behavior. They try to understand that on one hand of a human hand, there are only five fingers. Like AI is non-stop learning how we do things in a day-to-day basis. And humanoid robots, they can't really move very agilely. And that's why they are getting all these footages, none other than all the blue collar workers around the world. So one place that they are doing it is in factory because for factory workers, they are doing everything with their own hands. And right now, there are some workers around the world, they're being told by the employers that they need to wear a headset so that the AI would understand what they're doing. I mean, the heartbreaking stuff that I find is that they might not even be told that the headset, the camera they're wearing is to use to train AI. And in the future, at some point, maybe like, I don't know, 1 year down the line, when AI learn all the footages, how to move so delicately, how to handle certain materials, getting all the data around the world. Eventually, at one point, maybe 1 year down the line, these workers will be told by the employees that, okay, like the AI is mature enough. We learn all the data we need from you doing your job on a daily basis. Now you are officially fired. You are replaced by AI. That is just a heartbreaking behavior I've been seeing, and it does look like that is the trend. companies are moving towards now, not just Meta, but like around the world. But let's come back to Meta, since we're talking about Meta in the first place. So the bigger question I want to ask, where is the line? Because companies already monitor performance. That's not new, we all know that. But this is different level, if you ask me. This is not just like, did you complete your work? This is like, how exactly did you do it? What did you type? How did you think through the process? So this directly connects to AI, because what Meta is really building is models that understand how work gets done, not just outcomes, but the process, like human thinking process. And once you understand that process, you can start to automate it. And going back to the example of like these factory workers wearing that headset, like if you ask me, I honestly do not think that they know what the cameras are for, maybe for surveillance, that the boss know what they're doing. And if you ask me, I certainly do not think they would get paid extra for training AI. They were just told to wear their headset. And that's why I have a problem with this kind of stuff. And there's certainly tension here. Like on one side, let's go back to the Meta story. Like on one side, of course, we're going to get better AI, more efficient system, and faster development. But on the other side, there will be less privacy, like less control for us human, and more oversight, and potentially less need for human workers over time. And this is part of a broader shift. Work is no longer just like something you do. It's something that gets recorded, analyzed, and turned into data. So eventually that AI can replace you at some point down the line. If this model expands, we could see more companies adopting similar tools, more detailed tracking of workflows, and more AI systems trained on internal operations. And that raises long-term questions about workplace boundaries, about data ownership, and how much visibility is too much. So the bottom line is, Meta said this is about training AI in technique. This looks very true. But at the same time, it is also a system that tracks how people work in a very fine, detailed manner. So this is not just a tech story. This is a workplace story. It is a privacy story, and it's part of a bigger shift where human activity becomes training data, and training data becomes automation. And that's something we're going to watch here very closely going forward. All right, so we'll take a short break from here. When we come back after the break, we are diving into one of the social media platform turning into a financial platform. There's no doubt I'm talking about X. So if you're intrigued, do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin.
Stretch your income,
11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and rock song. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So now let's talk about X, what they just launched, because on the surface, this looks like a small feature update. But when you zoom out, this is actually a very big strategic move. So here's what just happened. So Nikita Beer on X, he introduced something called the custom timelines. So the idea here is quite simple. Instead of one main feed, you can now create multiple feeds based on specific topics. So right now, even on my X, the algorithm, and right now they're not pushing, they kind of like put it in the same bracket. But from this demonstration that Nikita put out on X, like as you can see, there are different tabs for different hobbies that you have. Here they have like design, photography, or art. So each of this category, they will push different posts for the algorithm. So for example, like if you are interested in Bitcoin or macroeconomy or AI, you can do so for your own tab, or maybe any other any other categories you guys are interested. And you can pin this directly to your home screen. So instead of scrolling one algorithm, what you're doing is that you're switching between focused streams of information. And this feature is, of course, powered by Grok. That is the XAI system. And what it does is that it analyzes posts, it understands what they are, what they are about, and combine that with your behavior. So the more you engage with the topic, the more precise the timeline becomes. And over time, of course, it sharpens. Right now, this is only rolling out to premium users on iOS. Android support is expected to come out soon, so early access is very limited. But the direction here, I would say, is quite clear what X is opting for. Like at the first glance, you might think, yeah, this is just like a better feed. But it's not just that. This changes how people consume information. Because before this new feature, custom timeline, what you get is everyone lives inside one main algorithm. And of course, they were not pushing Bitcoin and crypto anymore. But right now, you can live inside your own informative environment. The topics that interest you, maybe a Bitcoin focus feed, a macro focus feed, or AI focus feed, like each one optimized for that niche. And this is a huge shift because like attentions become more concentrated. Instead of a broad discovery, you get deep specialization, and that changes behavior. This update did not happen in isolation because just 1 week ago, X launched something called the Smart Cash Tags. So what you could think of is actually, okay, this video is a really good demonstration. So there's a ticker symbol, KO, and what it does is when you click into, for this case, there's a token called KO, and then you actually get the instant graphs. So imagine maybe for Bitcoin, for BTC, it becomes more interactive on X inside a social media app. What you see is the live price. You also see the charts and even links to, if you guys are into trading, then maybe you can purchase some Bitcoin. So now information is directly connected to action. Now, if we combine what we just said, so here they just wrote out the custom timelines and also this smart cash tags, you start to get the bigger picture. This is no longer just a social platform. It is becoming a real-time information layer and also a financial interface where you discover new ideas, you track the sentiment on X, like how many people are talking about a certain project, certain token, and you can act on it all in one place. And this is really powerful because, like, think about it. If your feed is focused on Bitcoin, you will see news around Bitcoin. You'll see all the sentiment, if people are bullish or bearish. You'll see the price data and also some trading tools all in one flow. You're much more likely to act faster in one place because the UI UX just improves significantly. There's so much, there's less friction between information and decision making and also taking that action. And that's where platforms become very powerful. That could mean built-in trading. That could mean wallet features. I mean, we have been talking about X wallet for a while, and even native payments. And if X eventually integrates Bitcoin payments directly, then this becomes something much bigger, not just a place to talk about markets, but also a place to move money, to execute that transactions and operate economically. At that point, you're looking at I would say a global, real-time and permissionless system where information, money, and action all live in one place. So I'm very intrigued to see where it goes, and let's see if Elon can successfully build the WeChat app for the Western world. And I would say, like, to be fair, this is a lot more than just WeChat app. Let's see if it turns out to be a successful product. All right, so let's turn our focus into the next chair. Actually, there's a major hearing in Washington, and this is a peak or a general idea of how the next Federal Reserve might think about Bitcoin. So I would say this is very, very important, and I do have some videos, some footage that I want to play out on this live stream that we can watch together. So what just happened is Kevin Warsh, this person widely seen as the top pick to replace Jerome Powell, just testified before the Senate Banking Committee. And during that hearing, he was being asked about his take on digital assets. So right now, I do want to play a short video for you guys. So let's take a look at this.
That digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections.
Senator, digital assets are already part of the fabric of our financial services industry in the United States. Yes.
Thanks, Mr. Walsh.
Senator.
Now, on the surface, this looks like a normal policy question, but the tone was very different. There was no dismissal, no skepticism, no, like, this is just speculation. What we get instead is that there was a clear acknowledgement that digital assets are already part of the financial system. Because for years, the default response from policymakers has always been like, just ignore the certain digital money, dismiss or criticize. But this time, it sounded like recognition. And this is where it gets interesting. So Kevin Warsh has actually been very consistent on this. He is one of the few Fed contenders who has spoken about Bitcoin without the usual negative tone. He doesn't see Bitcoin as a replacement for the dollar. What he does see is as a signal or warning system. In previous interview, Kevin Warsh made a very specific point. When people buy Bitcoin, it may reflect something deeper, which is a lack of trust in monetary system. So if you guys don't trust me, do take a look at this clip of the interview.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it, Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or it could provide market discipline. Or it could tell the world that things need to be fixed.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous.
So what he's essentially saying is that Bitcoin is not the problem. Bitcoin is the reaction. So instead of asking, why does Bitcoin even exist? Kevin Warsh is asking, like, what is Bitcoin telling us? And that is a very different mindset, if you ask me. And what about CBDCs that everyone's talking about, right? Since governments around the world are working on that, but interestingly speaking, this is where he draws a clear line. Let me show you this clip now to provide some sense of what I just said.
Currencies. Do you agree that the Federal Reserve has no legal right to issue a central bank digital currency?
Senator, I agree that they don't have the right, and I think it would be a bad policy choice.
Somebody just put an exclamation mark on that. Under your chairmanship of the Federal Reserve, you will not have the Federal Reserve explore or any way move towards a central bank digital currency.
If it's within the power of the chairman of the Federal Reserve, I agree with that statement.
So obviously, Kevin Warsh is not supportive of the Fed moving in that direction. And that matters because CBDCs, what they represent is basically more control, more visibility, and more centralization. If you zoom out, Kevin Warsh's framework looks like this. Bitcoin is equivalent to signal, while CBDC is equivalent to risk. That's a very different approach from many policymakers. Now, this isn't happening in isolation. Support for Kevin Warsh is already growing. Even Tim Scott has publicly backed him, calling him battle-tested and ready to lead the Fed. And don't believe me? Watch it yourself.
I think the first thing we should talk about is how this is a good decision by President Trump to choose Kevin Warsh. Kevin Warsh is a guy who's battle tested. He's ready for the job. And frankly, we are more likely to see more Americans experiencing their version of the American dream because Kevin Warsh will be chairing the Fed. It's time for the Fed to get back to independence.
All right, that was interesting, but why does this matter for the market, right? Because if Kevin Warsh gets confirmed, this is not just a personal change. This is a regime signal. Market will start pricing in different interest rate expectation, maybe different liquidity conditions, and very different policy tone. And importantly, a different attitude toward alternative assets. This is not like Bitcoin is the future. That is not what Kevin Warsh is saying. And this is not like Bitcoin replacing the dollar. What this is saying is that Bitcoin is more acting like a feedback, as pressure, maybe as a signal when policy goes wrong. Because when policymakers start listening to signals instead of fighting them, the dynamic changes. And for the first time in a while, you have a serious federal candidate who is not trying to shut Bitcoin down. He is trying to understand what it represents. And this marks a major moment for Bitcoin and the future of crypto in the US. Kevin Warsh did not hype Bitcoin. He did not attack it either. What he did is something important. He acknowledged it. And if he becomes the next Fed chair, that shift in tone alone could change how the entire system responds to crypto. So we'll take a short break from here. When we come back, we're diving our toes into Bitcoin. Is Bitcoin near its breakout towards 80K, or the momentum is starting to die down? So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So right now, let's start with Bitcoin, because Bitcoin is holding steady. Right now, it's trading around 78K, and more importantly, the momentum is building. Now, here's something interesting, because if we quickly hop onto Polymarket, here it comes to Bitcoin predictions and odds. There are so many predictions by a certain time. But there are two I do want to focus. So here we have the prediction for April. So we are entering the last week of April before closing the weekly candle. And based on this chart, 65% of people think that we're going to close the month with a 80K per Bitcoin. That is quite bullish. And more aggressively, so here's another one. So what price will Bitcoin hit in 2026? And 94% of people think we're gonna reach 80K. Like, I mean, by the end of 2026, if 80K doesn't look like that far, but like if you ask me, by the end of the year, 80K is highly possible. But like soon as April, I don't know about that, but I'm just reporting the possibility and what people think here on Polymarket. So just last week, convictions wasn't this strong. So everyone's asking, like, what changed? That should be something change, right? And the timing wise is quite interesting because it's just over a week left in the month. And this is not a long-term call. This is a near-term setup. So the next sensible question I want to ask is like, what drove this move, right? There's actually no retail hype though. However, there is institutional demand. So like we talk about the institutional demand quite extensively, and we cover STLC and Michael's strategy quite a lot here on Roxham TV. So we have to talk about Michael's strategy yet again. So what happened is we actually scroll down to the purchase side, the Bitcoin holdings of MicroStrategy on the balance sheet, like focus on the orange line on the top, like you happen to see, just keep going up nonstop. There is never a point that the orange line would go down. And that represents the BTC holdings that MicroStrategy has on the balance sheet. So what just happened last week is that Michael Saylor added another 34,000 BTC, and in just 1 week. That's about $2.5 billion. And the total holding, it brings the total holding to 815,000 BTC right now. That is like more than BlackRock. That puts MicroStrategy ahead of the whole BlackRock. Where's the chart again? So I had the whole BlackRock ETF. So IBIT, they only have, I don't know why I use only, but like MicroStrategy just like front run them. So IBIT only hold 806K BTC on the balance sheet, meaning this one company, so MicroStrategy, holds more Bitcoin than the largest ETF in the world. In other words, this tells us one thing, that supply is getting locked up at scale. Now, if we also scroll up, and I do want to look at the inflow, outflow of the Bitcoin Spot ETF, you notice something. So there are so many green bar charts on the top. That means like inflow. So what just happened last week is that there was nearly $1 billion of inflow last week. That is the strongest inflow since January this year. So, of course, BlackRock is controlling most of that inflow of the ETF because they are the biggest. So, over $900 million inflows from IBIT alone. And now even more institutional products are launching, like including new demand from firms like Morgan Stanley. So this is no longer retail money that drove up the price like we saw in any of the previous bull market. This is fund manager, like this is institutions and asset managers allocating capital. That's why we're looking at ETF, because like majority of the ETF holders, they are not individuals, they're not retail, but big companies, big institutions are trading ETF instead. So that's why we are looking at the flow. And not to mention countries like Iran and Russia. I mean, we covered that in the beginning of the show. They are also exploring crypto rails for trade. Like if demand stays the same or increases, price has only one direction to go. That is, of course, the narrative that eggs and all the traders are putting out, and according to Polymarket, that's what majority of people believe. However, let's also hop onto the chart, because we have to talk about this rally if it's sustainable. So right now it's trading at 78K. That is like, I'll give it that. Bitcoin is doing really well. However, zooming out, so of course we're starting with the daily candle. But zooming out, this is just like inside this bear flag that I've drawn months ago. Well, actually, what's happening? So that I drawn months ago. And when it comes to daily RSI, we are still at the critical point. So what I've done here is that I put together the resistance line all the way from October last year to right now. So it's going down, and then right now we still haven't. Wait, where is it? So we still haven't gone above the. Wait, my laptop's not working. So we still haven't gone above this resistance line of the RSI. So, however, what I'm seeing here, okay, there are some positive notes and negative notes I have to stress, I have to mention, because I'll give it that. Like, that is a very nice pump. Like, to be fair, if we zoom out and look at this rally, we pumped like more than 18% in a matter of 21 days. So that is very impressive. And not to mention, if we go to the monthly return of Bitcoin, in April alone that was a 14% pump. Of course, very generous. So I'm positive that we'll close April at the very least with a positive bump. Finally, not that the previous month didn't close with a positive number, but it was trivial, like 1.8%. Well, it's nothing for Bitcoin. But let's come back to the positive stuff that I'm seeing from this daily candle. Like this daily candle, we are officially inside this region, this box that I drawn, again, like months ago. The reason why I talk about this rectangle that I drawn so much is because, like, okay, this region, 77K to 80K, this is a critical point. We are just on the edge of the critical point. So that isn't confirmation that we're going up, but there is some positive note that I saw. For example, this daily candle, we actually closed above this bear flag, so this resistance of the bear flag. However, I do want to see if we manage to have like 2 or 3 daily candles above this top of the bear flag, this resistance line. Right now, it still doesn't look like it's acting as support, because I need 2 or 3 daily candles as confirmation we are closing above that resistance line. So here this is number 1. And then number 2 is that we are officially inside this region, this rectangle that I've drawn. And we are, okay, somehow we are still inside this region. So this is a positive note number 2 that I saw. However, that being said, people, okay, folks, so for the RSI, daily RSI, if we zoom closer, what we notice here is that there is a deviation, so a divergence. RSI is right now going down while the price is going up. So of course, that is a very bearish divergence. What it suggests is that the momentum, the bullish momentum, might be losing steam. Like maybe sellers are starting to kick in. That's why this is at a very critical point. That was on the daily chart. And in terms of the weekly chart, Weekly chart. That's something. Another thing I feel like is very interesting. We are again at that critical point, 78K. We don't have confirmation if it's going up or down. And for in terms of 2 week, we haven't looked at 2 weeks for a while. So let's spend some time to look at 2 weeks. So Gaussian channel. For the Gaussian channel, actually, let me close the 50 SMA 50. So we are at this trend line. Of course, it's going down, but like this 2 week 2 week chart, we still haven't closed that. Of course, we're still on Thursday. We still haven't got a new print. So like whether we close above this downtrend changes everything. But this rally, what it essentially shows is that we are moving towards the midline of the Gaussian channel. And there is still a chance that this relief rally could take all the way up to 95K. I'm not saying this is not impossible at all, but like that still doesn't change the we are in a bear market. And the reason say so because like that's usually what happened in the previous cycle. Of course, we have to hop onto the log scale, and there was a case that we rally towards the upper band, the mid level, and towards the upper band, and we get rejected as for the midline of the Gaussian channel. And I do want to eye very closely for the weekly candle because we are on Thursday right now. So I want to see this new fresh weekly candle if we get rejected at this trend line. Because like right now it's just weak for this this candle. And if we get rejected again, just like forget everything about the bullish momentum. So I'm being cautiously bullish. Some people like to say I'm being a long-term bear. I mean, that's not true. I do want to see Bitcoin to go up because I'm still doing DCA on a regular basis because I'm a long-term believer when it comes to Bitcoin. But one thing I don't get is that people are so against the 4-year cycle, and I don't know why. Because like the 4-year cycle, I would say is the easiest metric for us retail to maybe have a slight advantage, like a slight edge in the market. And right now, it looks like it's still following the 4-year cycle really well. So like there is this thesis that I still don't understand online that people think if the 4-year cycle is no longer valid, then that means institutions are buying and prices just going up consistently. But like, I hate to break it to you, like all assets in this world, they go through cycles, like bullish cycles and bearish cycles. It applies to everything, stock market and real estate, and of course in Bitcoin and also in crypto. So 4-year cycle is actually giving us an edge. So I do want to see, I hope the 4-year cycle still plays out. Though it's not very logical, I know, just because it happened like 3 times in the history doesn't mean it's gonna repeat again. So I get that thesis, but like we'll just take it from there because like this weekly candle we still haven't closed. We're still on Thursday. I want to see if we're closing above that critical level in this region, 78K, then we'll adjust the probability of us maybe going to higher places, to going to the happy land that we're hoping for. But right now, my thesis still doesn't change. And I usually don't flip around my narrative so constantly because it's just like very confusing for viewers. But anyways, I'm watching this very closely. And next part of the show, I do want to hop to Russia because Russia just passed a critical crypto bill. And they are not banning crypto anymore, but it's definitely not embracing it freely either. What they're doing instead is something much more strategic. What just happened is the Russia's parliament, so the state Duma, has passed a new crypto regulation bill in its first reading. This is the early stage, but it is a big step. If fully approved, the law could take effect as early as 1st of July. So as its core, the bill, what it does is that it creates a legal framework. It defines who can operate in crypto, how digital assets are issued, and how they are being traded, or who supervise everything. So under this bill, crypto is officially recognized as property. That means it now has legal standing inside the system, but that doesn't mean it's free to use. As for who is in charge, is none other than the Bank of Russia, and they get full authority to oversee the market, to approve participants and set rules. But obviously, this is centralization wrapped around the decentralized asset. I mean, we all know the gist, because inside Russia, like, crypto is actually banned for payments. Like, local citizens are not allowed to trade crypto. So you cannot use crypto to buy goods or pay for services inside Russia. But outside Russia, crypto is allowed, specifically for cross-border trade. Because Russia is under heavy sanctions, traditional financial systems are restricted. So they need to work around to pay for their goods and services, right? And that happens to be crypto. This creates a very clear structure. Domestically speaking, inside Russia, crypto is really restricted, but international speaking, they are very encouraging crypto usage. And Russia is not treating crypto as money for citizens. Like, it's treating crypto as a tool for global transactions. Now, let's talk access. Not everyone gets in. The system is limited to licensed banks, approved brokers, and a few regulated exchanges. And this is important. Like, investors are divided into quality investors and also retail users. If you're retail, unfortunately, you get restrictions. So you have limits on access, you have limit on volume and also participation. But you could ask, like, what about Bitcoin, right? And here's the interesting part for the bill. The law does not explicitly mention Bitcoin or stablecoins. So what does that imply, right? Well, to me, it looks like Bitcoin becomes the obvious candidate, not officially named, but effectively positioned at the front. Mining is also being formalized, so which means registration requirements, infrastructure rules, and regulatory oversight. So from issuance to trading to mining, everything is being brought into a very controlled manner, into a control framework. And that is not about adoption. That is about strategy. Russia is using crypto to bypass financial restrictions, enable trade, and maintain economic activity. So what we're seeing here is that we're starting to see countries using crypto not for retail, but for state-level strategy. We already talked about, like, how Iran exploring crypto for trade, global systems shifting under pressure. Now Russia is doing the same thing. So they are not trying to, not pushing for decentralized finance, not DeFi, nothing decentralized in any manner. They are trying to control it while still using crypto to operate outside the system. And I do expect our world is indeed heading towards that direction. All right, so that's pretty much all I want to cover in today's live show. But before you go, make sure to give us a follow on X or on Twitter. So my X profile is jamjamcrypto_io. Make sure to follow Roxham TV as well, because we have valuable news, valuable content updating on an hourly basis. To make sure to give us a follow, not just Bitcoin, but like global news, geopolitics, or AI. So point being, you won't regret following us on X. And if you haven't subscribed on YouTube, make sure you do so. As always, my show is Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels, being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching, and see you guys in tomorrow's show.